It has no real ongoing operating expenses. It doesn't really have management at all. It's not even a company, actually. The stock, as of today, might be trading at about a 30% dividend yield. That's basically it. You sit back and you collect your check.
Everyone's talking about the growth of AI and AI data centers, but few investors seem to recognize just how much power the AI rollout's going to consume, much of that natural gas. That means that there's still some dirt cheap stocks in the space that shrewd investors can take advantage of. Today I'm talking to Ben Dimas about a royalty trust that's expected to have a massive 30% dividend yield in a little over a year. Even better, the unit price was hammered and now sits well below where it was just a couple of years ago. But before we get to this investment opportunity, take a moment right now to subscribe because you do not want to miss what we're publishing next week. And now, Ben Dimas. Ben, what opportunity do you have for us today?
All right, well, I'd like to talk about a rather obscure opportunity, and the ticker is SJT. The company, it's not even a company actually, it's a royalty trust, San Juan Basin Trust. It's an express trust in Texas. And this is, I suppose, a quintessential example of the type of company that I like to invest in. So as the name suggests, it's a royalty trust. It has no real ongoing operating expenses. What it does is it has a participation or gross overriding royalty interest in the production of almost exclusively natural gas on properties that it owns. So I like the idea in terms of any type of business model that gives me a piece of the upside without a commensurate piece in rising expenses. And moving into what I deem to be an inflationary period of time from a macroeconomic standpoint, I think anything that gives me access to that is of interest to me. What I have found interesting about San Juan is that it sold off, I believe, a little over a year ago, maybe 18 months, on the suspension of a dividend. And so as I started to look into it, it came across my radar, and I realized that this would be an example of an event that's temporary. And so the reason why the dividend was suspended was because an operating company that operates on its territory, Hillcorp, had decided to increase their capex in terms of production. So instead of dishing out profits to the Express Trust, they said, no, we're going to hold on to this and we're going to reinvest in more drilling capacity. And of course, over a period of time, that will mean that the trust will be without dividend profits. However, eventually, on the other side of that, you've got to look in terms of what kind of production increases can occur. And if and when we can get to that point, what will that mean for the dividend distribution or the unit distributions once they occur? And I've written to my subscribers that I think that on the basis of a $3 Henry Hub, $3.50 Henry Hub gas price, and the production numbers that I estimate will be produced thanks to this new CapEx program, the stock, as of today, might be trading at about a 30% dividend yield, which is obviously attractive for value investors.
Yeah, 30% is not nothing, that's for sure. What exactly is a trust?
Yeah, good question. It's a lot less than meets the eye. A trust is a unit, usually a holding vehicle. Now, it can vary in different places around the world. In Texas and in some parts of Oklahoma and New Mexico, it's very particular in the way that a trust can simply be set up to hold profit interests. So imagine to yourself a trust is a set of documents that is run by some administrators. And that's basically it. However, what a trust can own is of extreme interest to value investors. They can hold some really, really nice, in this case, royalty interests, which is a percentage of profits or a percentage of production. A trust itself is nothing more than a collection of legal documents, to directly answer your question.
Okay, that's pretty interesting. I'm looking at, I guess, the trust price here. It wouldn't be the stock price, the trust price, just off camera. And it seems that it almost hit about $15 in 2022, dropped to about just below $5, maybe $3 in 2024. And it's hovering at maybe $6 per unit right now. And I guess the thesis, if we're going to sum it up in brief, is that there is a dividend cut. They stopped paying out. The stock dove for that reason, but they're reinvesting into production expansion. And when that hits, the payout ratio or the payout per unit, I guess, is going to increase substantially. And you're going to get a nice fat 30% yield. And there's going to be some inflationary tailwinds that might lift the gas price. Is that kind of summing it up there?
I think that's a very good summation. And if one were to simply look at the previous distribution level to the unit trust before the expansion program began, you'd still be looking at peak a $4 dividend distribution, which is obviously a really attractive yield. And we think that for the factors that you mentioned, increased production and tailwinds to the gas price, particularly around Texas in the United States, are two really, really bullish factors. And overlaying that with a capital light structure, so I have an interest in that, but I don't have any ongoing expenses, is really important. One, because it allows me to survive periods of flat pricing or downturn. Here I would describe San Juan's recent price performance as a downturn.
Mhm.
And from getting in at around a low of $3.60-ish, $3.70, I fully intend to ride this out because I have the patience and the business model that allows me to, I think, potentially earn a multi-bagger over the next 3 to 4 year cycle.
Yeah, I mean, you definitely, if you got in at 375, that's a nice price to buy in at, looks like, just based on the chart. Now, I assume that their major assets here is just a land bank with mineral rights. Is that right?
Yes, and it is a little particular. There are different types of royalty structures. I won't bore the audience with the minutiae of each detail, but basically, their particular type of royalty is a gross overriding royalty, a profit interest. So the operating company has the ability to detract certain expenses, and whatever's left, San Juan is then entitled to a percentage of that, as opposed to, for instance, a fee simple royalty like Texas Pacific Land Company, for example, that simply takes a clip of the production revenue straight off the top before any expenses deducted. So as a slight nuance there, but yeah, you're correct. These guys have an interest, and once that capital, the cumulative excess production cost has been reimbursed, which I estimate towards the end of this year at the latest, then it's off to the races.
Okay, so let's dig into this company just a little bit here. Is this basically the only asset they own? Do they have other, I guess, divisions or segments or assets, in various other places? When do they come public? What's kind of the brief history of the company?
Okay, so sure. This is you could classify this as the only asset owned by this trust. It was essentially spun out of another operating company. I think back in 1979, 1980 originally,
Mm,
and then from there, that's why this trust was really created. So they wanted a vehicle that could just simply be a pass-through entity for the profits. And they own, when I say it's a single asset trust, it is a single asset trust, but bear in mind that's over 120,000 acres, net producing acres in the San Juan Basin, which is a prolific gas basin in the US.
right. And so I guess you would value this based on just discounted cash flow, I guess, over the life of the basin, or how would you value this?
Yeah, that's a good question. I would simply look at what kind of production numbers do I think are viable for this company,
Hmm.
and it has. I believe it's 97 to 98% of its revenue interests are from gas, and that's really important at the moment with the theme around data centers moving into West Texas, and the fuel source of choice, at least right now and for the foreseeable future, to power these data centers will be natural gas. In addition to which, the Freeport facilities and the LNG facilities that are coming online in the United States over the next 12 months are set to double the demand for natural gas. And so you've had this situation where gas has been kind of trapped in the basin, and now all of a sudden we have a huge spike or catalyst in demand. So I look at what I think the production volumes can be, and I have a matrix of different price scenarios. And then, of course, the beauty of the royalty structure is your gross is your net. You don't have to worry so much about the ongoing operational costs because there are no real ongoing operational costs outside of the legal and administrative expenses to maintain the trust.
So you can basically just put a mannequin in the CEO suite and collect your dividends. Doesn't really matter. Management quality doesn't matter.
Yeah, exactly. And that's a really good point because what does Warren Buffett say? You need to invest in a company that an idiot can run because one day an idiot might run that company. So that's another, I suppose, plus for this type of instrument. It's a little niche, I understand, but aside from obviously the filing fees and the administrative expenses, that's basically it. You sit back and you collect your check.
I think he was also quoted as saying that you want a guy or you want a business where you just have to poke the CEO with a stick once in a while to make sure he's still alive. So,
Yeah,
but yeah, no, yeah, that's a major advantage of, I guess, a trust here. Those AI data centers, those are no joke. I know that a lot of the data centers they're putting together, I think it's the average data center uses about as much power and water as a medium-sized city. It's just incredible. So if you look at the AI development in the US and what's projected till like 2030, yeah, there's going to be a huge amount of electricity demanded, huge amount of water demanded. And I've looked at some reports that suggest that it's about a 40% increase by 2030 or 2035. That's just a huge amount of power. Now, a lot of this will obviously come from natural gas because it's one of the cheapest sources of fuel to generate electricity that you can have in the US, right?
Yeah, absolutely. You're spot on. And I was reading through last night around the amount of capex this year alone is in the hundreds of billions of dollars going into everything that's required for these, everything to do with large language models, let's say, from the data center and the rollout of the technology itself. Now, here's an interesting thing, Evan, because you've got the S&P 500 and the top 10% of the S&P 500 makes up about 41% of the index as of the time that you and I are talking. And if you value that, if you put a dollar value on that, it's around about $19 trillion. And so that's interesting because all of that, or most of those top 10 stocks, revolve around the technology space. And the technology space, as we just mentioned, revolves an awful lot around AI.
Hmm.
AI is limited by the energy expenditure and the water required to power and cool the data centers. And so if we think about the commodities, particularly land, energy, natural gas, and water, as being the inescapably limiting factors to AI, how much of the index is represented by companies that have exposure to those particular resources? And it might shock a lot of people to realize that only 2.9% of the entire S&P is made up of the energy sector. I mean, it's nothing. It's crazy. And if you drill down further and ask yourself, out of those representatives, the energy sector, the Exxons, the Chevrons, the Devons, how many of them have pure access to land and energy and water? And as far as I'm concerned, the only company I can find is another royalty company, Texas Pacific Land Trust.
Hmm.
And even that makes up not 3 percentage points, but 3 basis points, 0.03% of the entire index. So one of my key theses, and it ties in with the San Juan Basin Trust as well, is that eventually you're going to have a rotation of capital into these stocks that are holding up literally $19 trillion worth of the top heavy index. And it doesn't take a genius to figure out that 19 trillion trickling down into companies such as the San Juan Trust, for instance, at $283 million worth of a market cap, gives some space for some significant upside catalysts. And that's part of the reason why I'm so bullish, not just the commodity space, but the capital light business models that overlay that.
Yeah, I've seen that chart, or I've seen a few charts actually that kind of look at how much the energy space or the energy industry is valued as a percentage of what the S&P is or whatever. And it's near all-time lows where, it previously was maybe 15% of the S&P 500 or something like that. And I don't know, it just seems so obvious to me that if you have all this power demand going forward over the next few years, there's going to be a huge call on energy. And, nat gas is currently semi-trapped in the US. So, obviously investors are going to probably be rushing there to pick up, those increasing yields. Now, I picked up this book, Tomorrow's Gold by Mark Faber. And one thing that he says is you always have to be looking at the future, where capital is going to move to. He kind of pictures global capital as a big bull on top of the world, and it's just kind of sloshing around from place to place, and the cash is hitting various sectors around the globe. And so I think that energy in the US, because of these data centers, is definitely one of the places where capital is going to move to. And for whatever reason, it hasn't done so yet, even though it seems pretty obvious. Do you have any insight into why that is? I suspect it's because index funds have kind of disrupted the flow of capital, where everybody's just kind of plowing money into the S&P 500 or whatever index they've chosen. They're not looking for these massive pockets of opportunity.
Yeah, I think you hit the nail on the head with regards to the ETF or the index buying. You've got to remember that this is driven algorithmically, and the ETFs and the indexes, at least at the moment, are kind of forced buyers, and they don't discriminate in terms of where their capital is allocated. And I think that you're right. That has an awful lot to do with how we've seen this kind of distortion between the top 7 to 10 companies in the index compared to the rest of the 490 companies in the S&P 500. The original idea of Jack Bogle's Vanguard index fund was to give you a diversified exposure to different industries across an economy. And obviously, it's quite clear that when the top 41% of that index is really and truly highly concentrated in one sector, that model has started to break down. In the case of gas, particularly, a few interesting nuances, I think, in the US is because a lot of that gas has been trapped. So in order for shale producers to produce the oil, they have to continue fracking, hydrocarbon fracking at a high rate. And obviously the gas is not what they're looking for. They're looking for oil, and gas is a byproduct of that, and they have to kind of get rid of it somewhere. Most places around the world, including Australia, where I am, but also the US, have not invested in LNG facilities. So taking that gas, putting in a pipeline infrastructure, cooling it in order for it to liquefy and then be put on a carrier over to, for instance, South Korea or Japan, or obviously Europe, that could really, really use the gas. And so this has been happening in the background, and it takes time. I mean, you don't just construct an LNG facility overnight, obviously.
Right.
And so that's what has made the thesis take a little bit longer than most people were expecting. On the other side, and this is particularly pertinent to San Juan, is that Waha, or a certain gas market, has actually traded negative because it's been such a nuisance that people have been trying to get rid of their gas, and they've actually paid people to dispose of it. San Juan does have access to the California gas market, and there are not a lot of producers or royalty cos with access to that. So when you think about it, it adds another catalyst for San Juan, because they can start to have another market for which to sell their gas right at the time where billions of cubic feet demand for natural gas is all of a sudden starting to come online at the same time. So just another exciting catalyst I see for this particular investment opportunity.
I have to stress that I'm definitely a generalist in terms of investor. I'm not a oil and gas expert by any means, but from what I've been reading, the US is coming out with more natural gas terminals where they're going to be able to export more. I'm not sure when they're coming online, but I know that they're in development and going to be finished soon. So yeah, I would expect the gas price to rise. If you look at Europe, for example, the last numbers that I've read were $11 per million BTU, something like that. In the US, it's less than $3. So there's quite a big arb there. So, if those facilities come online, if there's some AI demand, then I can definitely see the gas price going up. But, take that with a grain of salt, because, obviously not an expert here. Let's take a step back and think about the value of this company just as it stands today. So if you were to put a dollar figure on the unit price, fair value, what would you place that at?
Sure. So again, coming back to a range of possible production numbers and a range of prices for which they can sell their produce, I've written to subscribers in the past that I think between baseline production plus 30 from where they were
Mhm.
gets you to 38 billion cubic feet. And I would expect that to be a really, really conservative figure. Looking into success mode, I think they can get to maybe 49 to 50 billion cubic feet. And if you just use $4 MCF, you're looking at about $85 million per year profit before distribution. So what does that mean for a company that's currently trading at 283 million in market cap? And I think I bought in at around 145. Well, that would be roughly a 32% annual yield in distribution. So that's where I get that idea of 30%. Now, I think markets are reasonably efficient, and I don't think they're going to allow for a 30% yield in an opportunity like this. So I would expect that to reduce to maybe a 10% yield,
Mhm.
which, if you do the math, works out to be roughly a 3x from here. So we can stop ourselves there. We can say, okay, on a per share or per unit pricing figure today, it's $6. 3x from here gets us to $18. Is that reasonable or is that unreasonable? And you mentioned the price history based on the charts. I don't think it's unreasonable to say a stock that was trading around the kind of $14 to $15 only 3 years ago, under improved circumstances with improved production numbers and improved gas pricing, I think it's fairly reasonable to expect that. Bear in mind, I'm basing this off pure success mode. I think we can get potentially a 2 to 3 bagger here. Disclaimer: it's just my opinion. I wish everything that I said worked out exactly as I had planned, but it doesn't. So disclaimer: I'm giving my opinion based on what I see today. I think potentially an $18 price target for San Juan could be the beginning of a decade-long bull market. And if we have an event similar to what we had in 2022 when we had gas prices going crazy, well, then obviously everything is a free call option that an investor today is not really paying for. So it's a free call option to an explosion to the upside in terms of price.
I mean, that all sounds reasonable to me. What's the balance sheet like? Is it, a debt nightmare?
No, and this is one of the things that I really like about these types of companies is that it doesn't make sense to put a lot of debt on them, and because for the reasons I mentioned, it's basically a list of files and agreements. So there's really nothing to it. They balance out their liabilities and their assets above a certain amount necessary for legal expenses and admin expenses, basically filing fees. They distribute it out, so you're never going to have a mountain of debt.
Now, we were previously talking about poking management with a stick. And, while management quality is not necessarily the end all be all or be all end all in this company here, they do have a role to play when it comes to shareholder returns. So, what have they been doing while the price has been depressed here? Have they been buying back stock? Has the dividend, well, I mean, they cut the dividend, right? So, I guess where's the cash been going?
Yeah, this is the thing. This is an express trust. It doesn't really have management at all, the way that you would normally expect an operating
Oh,
company to.
interesting.
Yeah, it's and this is one of the reasons why I actually like them, because if I do my quantitative analysis well, I don't have a management team that can mess me up. So it doesn't have management the same way that you would expect an operating company to do. The operating company has the right to determine their capex program,
Mhm.
and then based out of the final numbers, they deduct their fair capex expenses, and then from that profit, they can distribute to San Juan. So it's not. It takes a bit to get your head around. It's not like there's a guy running this company. It's not a company. It's a trust, and there's really no management team as such. It has stakeholders. The operating company, Hill Corp, obviously they have management. They make the decisions with regards to your operating decisions, let's say,
Mhm.
and they're actually a private company. So it's not as easy to do your due diligence in terms of management of Hill Corp.
Okay, so have they been buying shares in the company, or have they had the trust buy back its own units or anything like that?
I'm not sure the trust allows for unit buybacks. You would have to
Oh,
check.
interesting.
Yeah, you would have to check the trust deed. I don't think it does. I think it's a simple vehicle that's been set up to receive profits. That's the way that I read it. And in terms of the management of Hillcorp, if they're buying it, they may be doing it through an LLC. And so I'm not aware of any management purchases,
Mm.
but there are some LLCs that are accumulating shares that I can see through the filings. Potentially, they could be doing so through one of those LLCs.
Okay, well, this is definitely an interesting idea. I really appreciate you sharing it with us today. Where can people go to learn more about you?
Sure, so you can find me on Twitter. My handle is @TheRoyaltyKing. You can also find me on Substack with the same handle. My Substack publication is the ROI Club. And I'm also on YouTube. So if you type in @TheRoyaltyKing, you'll be sure to find me at any of the aforementioned platforms.
Awesome. Thanks a lot.
Yeah, thank you.